Depreciation. During valuation of plant and machinery, one of the important duties of the auditor is to make sure whether sufficient provision is made on account of depreciation of assets. Depreciation hence is defined as the gradual shrinking or shrinkage of value of an asset or depreciable asset which is permanent from any reason as time progresses. It's a measure of wearing out, consumption or other loss of value of a depreciable asset from use, passage of time, obsolescence of technology and market changes. Depreciation is always a decline in the value of an asset. It is a book value. It is also a permanent change in the value of an asset. Caused by wear and tear, it affects the earning capacity of the asset. It is also a charge against profits. It is always used in connection to the value of a fixed asset. Now the following forms the basis for providing depreciation, namely original cost of an asset, estimated working life of an asset, repairs and renewals, and obsolete asset. Let's see what each of them means. Original cost of an asset, including amount spent for acquiring the asset, also has expenses for freight and carriage, erection charges and other expenses. So everything is included in original cost of an asset. What is estimated working life of an asset? It is actually the number of years that an asset may be in service or may be used. That is estimated working life. What is repairs and renewals? That is the amount spent for repairs and renewals to keep the asset in a proper working condition, due to which the depreciation may be lowered on the asset. And an obsolete asset is actually depends upon the improvements made. The greater the improvements made, higher the depreciation that should be written off from the asset. Next, we'll see what are the methods for providing depreciation. Some methods for providing depreciation are diminishing balance method, sinking fund method, and revaluation method. We'll quickly see what each of them means. In diminishing balance method, a few percentage is written off every year on the written down value of the asset till the value of the asset is reduced to scrap. Depreciation charged by using this method may be higher during initial stages or periods and gradually decreases as time progresses. So that is diminishing balance method. In sinking fund method, a particular amount is written off every year by debiting profit and loss account and crediting depreciation or sinking fund account. And this amount gets invested in a sinking fund, that is some form of security, which may appreciate with compound interest. The amount set apart by way of depreciation is ascertained from sinking fund table. At the end of life of an asset or when the asset becomes a scrap value, the investment in the securities or the sinking fund is used to acquire a new asset. So that is sinking fund method. There is this concept of sinking fund and once the asset acquires a scrap value, the investment is made from the sinking fund to acquire a new asset. The last one is asset and revaluation method. What it means? It means that asset in revaluation method is evaluated towards the end of an accounting period. The difference in value at the beginning of the year and at the end of the year form the depreciation amount for that asset. So this completes methods for providing for depreciation. Next, we'll take a look at plant register. The plant register gives out details of individual asset and is useful for tracking, record keeping and maintenance of the individual assets. In this register, usually what gets recorded are acquisitions, replacements, additions, retirements and extraordinary repairs. Each item that belongs to the plant is given a number so that automatically it is attached to a particular department in the plant. It's even useful for interdepartmental transfer of machinery. Lastly, we'll take a look at what are the duties of an auditor for providing depreciation. Auditor should certify the profit and loss account and balance sheet, and by doing so, he or she may give a true and fair valuation of the company's state of affairs. The auditor's main task is to make sure appropriate depreciation is provided for all the assets or machinery in the plant register. He should also verify whether assets are properly stated in the balance sheet. He should make sure there exists a proper method of depreciation for each asset in the plant register. Proper estimation should exist for assets until the entire duration of its useful life or when it acquires a scrap value. So this completes depreciation.